Hi, this is Randy Finney with the Right Side of the Chart, and this is a mid-session update for Wednesday, June 24th, 2026. It is 12:49 p.m. Eastern Time as I'm starting the video. Here's what we'll do. I'll try to do it in this order for those wanting to skip ahead in case I am not able to immediately provide the AI-generated summary along with the post. Again, if I don't do that right away, it's only because it hasn't generated a transcript. I have no control over that. I can't rush that process through YouTube servers. But once that's out, the AI engines are able to parse through it and give a nice detailed summary of the video, including timestamps, which is very useful if you want to jump ahead to a particular trade or coverage of a section. All right, I won't spend a lot of time here. This chart's getting a little busy. This is a 60-minute of QQQ, but before I get started, let me tell you the order I'm going to take you through here. We'll do a quick update on the equity markets, really focusing on the Qs. A brief update on the semis. I did both very granular, in-depth coverage in the last few videos, so there's no reason to do a deep dive today. Not a lot's changed, but I'll share my thoughts. I'll touch on strategy, which hit our first target today and is below there, and Bitcoin. And when covering strategy, to cover strategy in a vacuum or analyze it or trade it without trading Bitcoin or analyzing Bitcoin, I should say, is comparable to trading GDX without paying attention to gold. I've always said any analysis on GDX to be long or short, bullish or bearish GDX, meaning the gold mining stocks, is to be long, bearish in gold, silver, and I also include the US dollar in there because gold and silver are dollar sensitive. So in almost any video that I do coverage on gold and GDX and the miners, I'll cover the dollar as well. The dollar just hit my next price target that I covered in recent videos, so therefore, well, I'll get to that in a second. Crude oil, I got to post out to you. I'll maybe do a brief update, time permitting. And again, time permitting, if I can whip through this pretty quick, I'll touch on some of those defensive issue stocks for those of you that don't care to short or just looking for different things. I still like the packaged food sector and select pockets in the market, defensive issue stocks, but not broad based. I don't like across the board all the consumer staples. I don't like utilities, which normally are a defensive issue. And some of the other ones there, even healthcare. We kind of already milked most of the meat off that bone. All right, let's dive in here. This is the 60-minute chart of QQQ. Just to recap for anyone new, we had major sell signals. These were the trend lines that generated major reaction lows on March 30th. That was the primary uptrend line. I gave 4 targets on this current trade that we're in before the breakdown. The breakdown was to come on a break below that trend line, which we got there. And comparable, I wanted to see a criteria was that the S&P would break down its comparable trend line, which it broke down the day before QQQ did it, a day or two. And then we sealed the deal. We broke the recent lows there, and so that's it. So we went down. We hit the top of my first target zone. We bounced, and we bounced back to right about the entry point on the trade, and here's where we're at right now. Today seems like a dead cat bounce day. We were green for a little bit earlier. I told you I'd be away from my desk most of this morning. I'm back now, of course, caught up on the charts, and that's it. So I think it's still an objective short because we're not too far away from the initial entry. Plus, we already had a nice reaction off the first price target. So do you short it here at support? I'm going to give you levels. It's not the most objective thing. The best thing to do is wait for a break of support. You can either wait for a break under 715, or traders always focus on these reaction lows. These are the next 2 support levels, and these remain. Remember, T1's already been hit, so we've already kind of checked that. That's not to say we can't have another bounce if we get there. It's still support. In fact, if I thought back here, when we were up here, before we even got there, it was labeled as my first support level. The fact that we had such a clean and powerful reaction off it extremely further validates that as an important support level. Before, again, my targets are based on my analysis of the charts. I can see a little gap in there. Figured that's where the first, all the targets are where, a reaction is likely upon the initial tag. We got a little bit more reaction than I thought, but again, all we went back is to about the entry point on the trade. So there's where we're at. And what I'm getting at is, yeah, we could certainly bounce again because now it's more valid support. The whole world can see it now, or maybe few people didn't see it before. Um, Other than me as a likely reaction point. Now it's a very distinct reaction. So my takeaway, what I'm trying to impress here, is if and when it's taken, whether we have another reaction off at first or not, it's going to increase the odds we go down there. And just eyeballing this, I'll bet you we come on down to oh yeah, T2. Yeah. T2 is still 664.87. I mean, and that's the actual support level. You always want to cover a little bit below the above on a short above the actual support level you're talking about. I see a nice thin zone here in the volume at price histogram, and a thin zone is where very few trades occurred, and they work similar to the gaps. On a gap, you'll have no trades. This is the trades that occurred in there. And so thin zones often act as support. Again, that thin zone developed since I gave you the initial target, so it only further validates my second target now as a likely support level. These volume price histogram bars are dynamic; they're changing every day. Remember, there were a lot more and a tremendous amount of more trades since we entered the short than before there. So these bars are all different from the initial setup. So, anywho, that's it. That's still the next target, and that's still the final target. Hard stop. Nothing more to add. I still maintain those targets, which means I think there's a decent chance they'll be hit. And if and as we get approach T4, you'll know my thoughts as to whether I think it's worth covering and or reversing for a bounce, or possibly even sitting tight. Depends what happens. Uh, you know me, I think the risks are elevated for a potential crash like scenario if we get an unwind especially in the semis. Still watching the financials and other things and treasuries and all that other stuff. I think crypto may be blowing up here. We'll see if that has some ripple effects, or it has a potential to blow up. All right, let's move on. SOXX SOXX semi, that's the little wedge I gave. Somebody asked recently the next sell signal on the semis. I said it would be a break of this little minor. This is 60-minute chart after that divergent high. And so you got it yesterday, and that put the semis, it was an ejected add-on or short entry. I still maintain these targets I gave you before, T6. A lot of meat on the bone if they're hit. And then I did a deep dive yesterday. I gave you this additional uptrend line, new benefit of the doubt trend line. Told you we're working on a bearish engulfing here on the weekly, which if we get it, remember these have the potential, especially you got to look for them at the right time. Bearish engulfings can come along the way in a trend. You never want to look for one after a correction or the end of a bear market, because they're by design they're potential topping candlesticks. You want to look for them after a prolonged bull market or an extended uptrend like we have, or especially when you have things like a potential blow off top scenario, high volume, everything I covered. So the takeaway, guys, again, your analysis is going to be your own. I'm going to share my thoughts. That's what you pay me for. This has the potential, just like in silver, where we put in a major top that proved to be the top, or at least a very significant top. I'm watching that. I expect that to happen based on everything that happened recently on the 60-minute chart and the daily that I covered. Just to give you a quick eyeball on what's going on the semis, remember when I did the update yesterday, several had just recently had some pretty clear breakdowns, sell signals based on trendline breaks or support level breaks, or failed breakouts like on Intel coming back in the trading range. It's kind of a mixed bag. This is the components right here of the SOXX semiconductor ETF, SOXX. And you can see, again, a mixed bag. Qualcomm's down. So, just revisit that video if you're interested in the semis. And for those that hadn't yet broken down, I'm sure we have a couple others that have broken down since then. And a little more downside on Intel. I want to see that keep going. And that should then shoot us back down to and into the wedge. And then remember, I say this often, there's always going to be folks on this site that see things different from me. Whether I'm bullish on something and they're bearish, you're bearish, or I'm bearish and you're bullish. And as I always say, you can use my analysis because what I do, I always give you my thoughts. I'll tell you my positioning if I have one. I have no qualms in doing that. But I also, my kind of my niche, my specialty is identifying key support and resistance levels that I believe are very valid and will have an impact if a stock falls to or breaks above or below those support levels. So what I'm trying to get at, for example, yesterday when I went through the components, it was really the Robinhood, top holdings, top 10, but it mirrored pretty much the FANGs, the Mag 8 stocks. And in there, I told you the most bullish one. I said, look, I'll point it out. If you've been looking to buy a dip, Amazon was my top pick. It had positive divergence on the 60-minute chart, which most don't. And that's bullish, aka positive divergence, a little wedge. And on the daily chart, it had also made a full tag drop to its 200-day intersecting 200-day moving averages. And it's not by mere coincidence that Amazon's the most one of the few green stocks in the Nasdaq 100, top 10 holdings, and it's up by a factor of at least 2.5 over the next performing, which is Apple. And Alphabet are only up 1%. Everything else is red. So there's an example of, take the other side of it. Now, it's a reflexive bounce. You could have just traded that. Sometimes I'll do those, get those, what I call reflexive bounce. When you drop down, it's my hacky sack or ping pong ball analogy. You're going to have a reaction off the first pullback. Here you hit the 200 exponential, you bounce. In the last couple days, the stock's been falling and holding among the 200 simple. And simple moving average, that is. But it's a simple trade. You take it with a stop somewhat below the 200s, and it either holds or not. So again, if you think the market, which I know we've got a couple here, at least every time the market makes a new high, they come out and tell you, oh yeah, you should just keep buying the market. It's always going to go up. But this is when you buy. You don't, I keep saying every time that happens, it's almost comical because this market and these stocks have a pattern. The MO in recent years has been breakout to new highs. It's a marginal new high. It's with negative divergence like this one, and then it fails. Like this one here, and these were new high breakouts back here. That was a marginal new high in the S&P, and then it corrected. It made a new marginal new high here, and then it corrected. Marginal new high, and it corrected. So this is the opposite of what, if you are longer term bullish, you should be doing. You should be buying these dips, these pullbacks to support. So again, the takeaway is, whatever sector I'm covering, I'm going to get to gold and GDX and silver in a minute, and Bitcoin, and give you my thoughts, my position. You can take the other side of those trades if you do it objectively. That's all I'm saying. Buy pullbacks to support. So if you think the market's going to new highs, Amazon, as I highlighted yesterday, so far it's playing out. One day doesn't make a trend, but will probably be one of the better outperformers because it's pulled back to the 200s. Then you have other stocks like Nvidia that haven't yet come back to their 200s yet. Apple's hasn't checked its 200 since back here, which I believe I highlighted at the time. That was the last time we hit the 200 days. So that's how, again, you can benefit from, find value in my analysis if maybe it's a support level or a resistance level that you didn't see, or a trend line or something else, and then trade accordingly off there. Okay, let's move on. So we already covered the semis. Now let's go to Bitcoin and strategy, MSTR. Made my thoughts very clear on this. I think you'd be hard pressed to find, there's certain, websites and blogs and things out there that only, focus on Bitcoin and things like that. I trade anything with a ticker. I have no beef with Bitcoin. I think it is useless. I think one day it'll be a nothing. It is a big fat nothing in my opinion, but I understand I get the whole concept, the bullish argument from crypto heads or whatever you call them about the, it's the anti, a way to get away from the fiat currency system and the rigged game, the Federal Reserve and all central banks and the Treasury Department, just all the shenanigans that go on, especially since the U.S. got off the gold standard, right? I get that, or at least I got that. But there are two core arguments that I've always had with it. The first was the fact that, yeah, okay, it's this great code and there's a limited amount of Bitcoin. Once it's all mined, you have scarcity because there's no more Bitcoins that could be created once, the algos, unlock all the shares or units of Bitcoin. But I always said, well, what's there to, it's just code. It's bits and bytes. bits and bytes. What's there to you prevent Bitcoin 2.0 and Bitcoin 3.0? We already have all these other shit coins and altcoins out there. And so from that, and again, the fact there's no intrinsic value, something's worth what people are willing to pay. It just reminds me a lot like the tulip bubble in Holland. If you guys read history, that was probably the first well-documented bubble in the financial markets. And then came the South Seas bubble and all that. There's some great books out there if you want to read about bubbles throughout history. And now we're working on an AI bubble and probably an everything bubble. And this was certainly one. So here's where I'm going. All right, let's talk charts again. We've slayed this thing with impunity, shorting it up here, these breaks, covering there at the exact lows, running it the other way. Got in a little bit early on this last short trade with the initial short entry on the break of that trend line, but I also then highlighted this trend line. I revised my stops on May 6th to say we're going to give it a little room because I very, very much still like this trade and think it's going to where I think it's going. And so that was our second entry on the break of that wedge. Two little trend lines. And boom, T1's now been hit and taken out. So what I just drew for you right here, we do have positive divergence. So I still maintain these targets. That means I believe that we are going here. It is going to entail a crash in Bitcoin. And you might say, well, Randy, Bitcoin's already crashed. No, Bitcoin, let me go to the crypto itself here. Bitcoin's doing what Bitcoin does. Bitcoin has, the cycles, the trends within the longer bull market, if you want to call it that, are, high double digits. This was the last peak. We're going back 5 years here, but there was a bull market that ended here with this divergent high. Then you had a sell signal. The drop or correction or whatever you want to call it was 80%. 78 you can see from my pop up there. Then you ended with a divergent low, which is bullish, ended that bear market. Let me remove that trend line, and from there you went on to break out of that bullish falling wedge, and you had a bull market run of about 728%. From there, let me move that trend line. This is just how I measure with this platform. We've dropped 53%. Well, first of all, that's only not half, but a fraction of what we dropped that last time around. I've made clear from the beginning. It's annoying me. Let me try to get this trend line. I changed the line grab sensitivity. All right, I'll just leave it there. It's not letting me grab it. As you can see, it should highlight when I get to it. It's bugging me. Okay, so we had sell signals here on that break, then here, and I gave you all these targets. These are all potential targets. And so now the thing is, we're holding this on this 58,628 target. When we hit it, I told you we had positive divergence. There was a good chance for a reflexive bounce. I said, where to? Well, maybe a back test of these trend lines, which we got. You had two similar, I just gave you a BOD, two trend lines. We back tested them and jumped back to the previous level. And we still have the positive divergence. So let me just say it very clear. Bitcoin, the crypto, that's what we're looking at, our BTC, the actual crypto, is still at support with positive divergence. But we already had a bounce. Now, in bear markets, you get positive divergence along the way that either results in a very little bounce or no bounce at all. You go through it. So if I'm correct in my analysis, then that's probably all we're going to get, or maybe all we get right there. We've had the bounce. It was a double digit. I have to zoom in to measure it here. We can do that. Let me just drop down to a shorter term frame, and I'll try to measure and tell you how much we bounced. And go back to 1 month here. That's a wonky candle, but let's just go to that level. That was a 15% bounce. So, worth trading. I love bear markets just like I love bull markets. I love shorting in bull markets, corrections. And I love trading corrections, which are counter trend bounces in bear markets. And that's what that was. Now, so the $1 million question is, if I'm right, do we go lower? Well, I can tell you if we break this level, that'll certainly be a start. Be objective, because we've danced on that support level several times. Hopefully you guys can see it. I know I'm zoomed out to 5 year. I can pull it in tighter. There it is. And especially if we can burn through this divergence, meaning take out these previous lows in the indicator, then you no longer have divergence. And then Bitcoin should really start to fall. And I think, I know it's been a crowded, it's loved by the retail crowd, but back to my fundamental criticism of Bitcoin. So let's say that you are on board with that whole, yes, it's a way to get away from the rigged fiat currency system, right? It's, government, US, the Fed's going to just keep printing money and debase the currency, and all other central banks will as well. It's a race to the bottom. Countries want their currencies weak because it helps exports. When you have a high, when the yen or the euro is high against the dollar, exports are more expensive, so then those countries suffer, especially if they're dependent on exports. And so that's one reason, among others. The others, it inflates financial assets. It helps. It's a way to debase the dollar. Is a way to finance our deficits. U.S. runs a deficit budget right now, and so we have a tremendous amount of treasuries coming due and interest to service on it. So when you can just keep printing money, that's what they're doing. Print new money to make money up out of thin air to pay off the interest payments coming due on those bonds. So, okay, that's kind of how the financial system works. So, okay, so from that point, I get it. Now, the problem is Wall Street, in their infinite power to lobby and get what they want, because it's such a, we're such a financial based economy now. And that's where the big money is, and everyone knows they're deeply in bed with the politicians. It's a revolving door between Goldman and the White House and things like that. They were able to then pretty much take away what crypto had. Is gone now with the advent, with the Bitcoin futures from the exchanges, CBOE, CME, dealing with crypto and Ethereum futures and Bitcoin futures. Then the spot ETFs hit a couple years ago. That was when Fonzie jumped the shark right there. And then, so now Wall Street has their stamp all over it. So does the IRS. As I've told you a couple of years ago, you had to start checking a box now when you do tax return. Have you traded any crypto? You can now go to federal prison. It's a federal offense. It's tax evasion if you're moving Bitcoin through the blockchain, and however you guys call it, where you're not trading it on, if I do here and I sell some Bitcoin futures, I have to report that. I get what's it, the 1256 on the futures contracts, or if you do the IBIT, or even any Bitcoin ETFs, it's reportable through your broker. And so again, you want to do Bitcoin transactions outside of the regulated markets, then it's tax evasion, not reporting that you've traded or transacted or even held those things. So what I'm trying to say, that gig is up, kind of, and so that's my fundamental ramblings, guys. All right, I don't trade fundamentals, but I do factor them in, and that's why. Because I did have people ask me, when I added T4 here, I initially had 3 targets on this short trade. And then I added this because I believe if and as we get down here with strategy, it's going to unwind one of the biggest, I'll call it a Ponzi scheme. I'm going to try to hold my tongue, but let's just call it that for what it is. It's they're leveraging up on a big fat nothing burger, what Bitcoin really is at the core. And again, because of the reasons I just stated fundamentally, Bitcoin falls, strategy, because they built up such a huge treasury holding in Bitcoin, and they're using a leveraged strategy to do it. That will most likely be the death of it. And then you get that nothing is more beautiful to be short at an unwind of a big leverage trade. And so that's it, guys. So, it either plays out or not, and I'll give you my 2 cents if and as we hit T2. But right now, we took out T1. We have that positive divergence, but that doesn't guarantee. Remember, divergence, just like oversold, is not a buy signal. Just like overbought and divergence is not a sell signal. What's a sell signal is a break of support, and that's my main trading style. I look for things that are overbought with divergences, and then I align and look for the key support level that's likely to be the catalyst for the reversal. All right. And so We are already coming off that looks like it was the top, looked like a blow off top in strategy, made a marginal. This looks just like right now the QQQ made a big divergent high, sell signal there, pushed back, tried to make a new high, but fell shy with negative divergence in place. And this has all happened. Remember, just like kind of what we're seeing right now on the QQQ 60-minute chart. All-time high, major sell signal, break down, push back up on a counter trend bounce, put in a smaller but still a new divergent high, and so that's that. So we'll see if it plays out that way. And at the end of the day, I need to say this often, because I get it a lot, almost to the point where I have to admit, guys are subscribers. I don't mean to be critical, but it can be annoying when people, I'm sorry, I feel bad for anyone that says they're getting clobbered on a QQQ short trade or a SOXX trade, because they put everything in that, because they see dollar signs. Um, you know, Spread your bets. Crypto, treasuries, commodities. I'm still longer term bullish on commodities. I still like the grains, wheat, corn. Those are still long term holdings in a lot of my longer term accounts. Um, I gave you crude oil today as a long after closing that out. So let me move away from crypto. I already covered that, but again, this tells me if this continues, what I'm talking about here is the fact we put in a low there back in February, and we have a new low in strategy where we don't have a new low in Bitcoin. We do, yeah, we do. Okay, not on the spot Bitcoin, but on these ETFs, and so we're gonna watch this, and yeah, nothing's changed. I'm leaning towards us burning through those divergences. But like I said, we're in close proximity to support with positive divergences, so you have to be careful. Let's move on to the next one, which is, I told you I would do gold next. Okay, somebody asked me today, and I confirm. Yep. How's gold look? Does gold look good for a bounce? I think it's objective. We called the top on gold. It was a clear textbook buying climax, blow off top right there. See, it looks just like the semis where you went nearly vertical on that final ascent on huge volume. This is a textbook buying climax. You can see my volume bars right here down below, and the top in gold. And so far, that's been not just a swing tradable top, that's a trend tradable top. That's a 30% drop. We're below the 200s. 200s aren't as important on gold as they are on a lot of indexes and tech stocks. Okay, so these are the targets. I gave you a total of 3 targets. Potential means just that. Unless I remove the word potential and tell you that that's an official target, it's only a potential. That's what it was on strategy. I always had a potential T4 down there, and then I made it official about a month or so ago. But here we are. So this is support. It was a target zone that I gave you first all the way back on, created that back in December. I might have dragged it, moved it. You can check the charts. But we hit the top of it recently. We bounced. I highlighted it when we hit it. We got a bounce. Now we're at the bottom of the zone, which is still support. A zone is when I have 2 support or resistance levels in close proximity. You also have positive, aka bullish divergence. Yes, just like Bitcoin, it may or may not play out. All I can tell you is it's objective to go long at support, and you could do the same thing on strategy. You're down below support, so you got to wait on strategy. If you're bullish on that one, you should wait for a recovery back above the that first target we just hit. All right, that would mean, well, here, let me show you what I'm talking about. If we ran back up above 102.19, which was that previous low in my first target, then that would be a whipsaw. You'd really want to wait to see this downtrend line get taken out. So if you're bullish on strategy, that a breakout, a recovery back above here and a breakout, that would be near-term bullish, right? That's what you want to wait for. You don't buy a breakdown. You buy if you think it's going to fail, best thing to do is just wait to see it fail, meaning a recovery, and then with that trend line, you'd want to see that taken out. So on gold, all I can tell you, it's at support. Positive divergence here on the daily chart. Positive divergence here on the 60-minute chart. I'll mark it up. Again, I was trying to get this video out to you guys as quick as I can. So I look at this stuff, I can see the divergences. I didn't mark it, but there it is. And again, positive divergence isn't a buy signal, but nor is a pullback to support. But I always say there's two objective ways to go long a stock. Number one is a breakout above resistance or a bullish chart pattern. That's a breakout. That's a buy signal. The other objective entry is a drop to support if you think there's a decent chance that support will hold. If it doesn't hold, here's where we're going to go. We have a trend line here, and I'll probably be highlighting that as the next objective entry in gold. So to kind of give you an idea, if it drops below the level here, I just started around that point. I'm just measuring for you. It's got about another 5-6% to get there if it keeps going lower. And targets, well, there's a beautiful trend line right there. Let's just use that right now as our sole target. And so, and then if it breaks above that, maybe more. All right, so we've already had a, by the old school definition of bear market in gold. Remember, gold is, it's about a 30% drop. Let me get to the rest of them. Silver, I gave you a total of 3 targets. This was a beautiful trade, one of the most profitable trades in years for, especially in short order. We got in front of that crash, entered it short as a swing trade, and then the night before, that Thursday night when the crash started, I warned of the crash, and that's when we got it. Biggest drop in 50 years. And then we went on, hit the second, and recently the third target, which was, I guess, this trend line right there. Yep. And so we're right now in close proximity. That's a very minor support with better support down here. So what I'm showing you is you have a range. I'm going to tighten it up here. I'm going to measure down. We could overshoot these levels a little bit on gold and all that. So it's about 5.84. So yeah, about 6% downside. So I took a starter position. I did not go heavy in gold today. I took a starter in silver, gold, GDX, and across a couple accounts. Now let's do GDX. GDX, remember when we hit T2, I told you that was T2 was hit, and that effectively, because gold and silver hit my final targets, that event takes away T3. When I first gave you these targets, we were back here. We either shorted there or there. That was T1, T2. Now I can tell you we have positive, aka bullish divergence. We're at support. It was a previous short trade here, T1, T2 hit. So support with the next support right here at about 67. You can see that says 66.98. Let's make it a round number since it's so close, $67. And here's where we're at now. We hit T3 there. GDX has a higher beta than gold, so and even sometimes silver. So that would account for about a 9% drop. So you might want to factor that in if you're interested in scaling in. We can get there and still have the positive divergence. What I'm doing is pulling these lines out. In other words, it would look like this. So this isn't what I call a hard entry. It's more of a soft entry here, or aka a scale in. Anywhere from here, because we could reverse soon, because I'm going to get to the dollar in a second. But if we go a little lower, I'm just going to pull that divergence line out. We're going to do this, and we'll still have positive aka bullish divergence. A very simple way to say this, guys, this is a buy zone from here, where we're at the previous reaction low, down to, but not below there. I would buy, add to, take a full position there if it still looks good, or increase into a full position with then stop somewhat below, either a hard stop or a scale out based on what's going on. And then finally, remember, I always say any analysis in gold, silver is incomplete without analysis of the dollar because of their inverse correlation. For months, I've been highlighting this basing pattern here in the US dollar index. This is NYICDX. That's the ICE US dollar index. And I told you if we get a breakout above 155, it should take us up to my next target. And that's exactly what was hit today, or about that. Let's see, for fun. You got to get close enough. Doesn't have to be exact. High of 101.80 versus my 101.85 target. Close enough for government work. So therefore, and you can see just like gold has that positive divergence, see the dollar has now negative divergence. Just like down here we had bullish divergence. It was a catalyst for this move up. So that's it. So look, I'm not looking for the dollar to, a big move. I'm looking for reflexive. Probably if we get a reaction here, come back, pull back to this uptrend line and that breakout point, and then probably zigzag our way up and do the next leg up. So I'll time That now, if the dollar goes up a little higher, there's my next target resistance level, and that right there will most likely correlate with the drop that was 5 or 6% or so drops in gold and silver, be a little more in GDX. And so that's kind of the scaling point. So I would still be comfortable with adding to my gold, silver, GDX positions there. Almost expect it, almost kind of lean that way. But again, you never know. That's why I like to take these starter positions, because sometimes you reverse early and you never get that optimal or lower entry point. All right, we are moving along good. I gave you guys crude because I trade crude futures, but I know some of you used USO. So let me go over the 60-minute chart. This is what it looks like. So I gave you a bullish falling wedge pattern, and that's it. So I haven't updated targets on USO, but I can just tell you, it's just like crude. It's at support with a positive divergence, bullish falling wedge pattern. So looking for a bounce, I'd say you can correlate the targets. Take that CL chart I gave you. I'd say that's your max bounce target up here. And that would be, if hit, max bounce target would be about maybe almost a 20% possibility for about a 20% bounce in crude. I'll just kind of play this one as we go here. All right. Man, doing good on time. So I'm going to recap. Currently, bearish short NASDAQ 100, semiconductors via, and you can, my confidence is high enough, Mike. I always get Mike once. Mike loves the leverage ETFs. I think my confidence is pretty high where this is, we're going to have a pretty good correction coming here in the semis that you can use the, I gave you SOXX targets yesterday, and that would be, might put well, let's just say third target put up. It's somewhere in here, around there. And again, remember, you're going to get decay on these. It all depends on if and how it plays out, guys. So over time, I have to move these targets due to the decay. But there it is. That's what SOXX looks like. I don't have a great downtrend line, so that's kind of meh. I'm going to take that one away. Either way, coming off that divergent low. And always use the SOXX chart. And again, I get more granular. I look at the leaders, and remember, I gave you back here in one of the videos, I gave you 3 targets on the video. The last update, what was it? We hit T1. Let me see. I think I've got that chart somewhere. May 29th. Here, hold on a second. There we go. We hit T1. I give you a bounce target zone. Maintain the next targets T2 and T3. There was the sell signal. T1 hit, bounce as expected, and went up there a little bit higher than the bounce target zone, but still just kind of like QQQ, right back to the breakdown point, maybe a hair above it. Then the next leg down, and we are now, remember, I always say cover a little bit above. That's for all intents and purposes. That is a hit of T2. If you are in this trade, that's it. And just like I said back here, if you're bullish NVIDIA, that's where you can go long. You can buy it there. If you're long-term bullish on NVIDIA and you didn't buy it there, you can buy, or you bought a little bit there, you can buy it here. And look, guess what? You had positive divergence here. You got a little bounce. The divergence has gotten even bigger. So there's positive, aka bullish divergence on the 60-minute chart. These are things that could foil the short trade in QQQ. If NVIDIA, if divergence takes it to new highs, it's going to take the market with it, right? But if it's a true top and there's more to come, we're going to hit T4, you're going to keep getting these little divergent lows. You'll get these little bounces, and then they'll get sold into. And if we take out T2, because it's support, T2 zone, we go down to my third and final near-term target. If so, and you took this one, you'll have made 18% NVIDIA. You already made right now about 14% if you shorted that breakdown there. And all right, that's it. We can just, for those looking for the steady Eddie blue chips, I'll just sort it by, I had these sorted flagged here. The ones that we're in, KHC, we already hit our first target. Remember, I started covering these a few months back. General Mills. So you're seeing, again, they're not high flyers, but like I told you before, this is stuff I'm putting in IRAs, my longer term accounts, that you're getting dividend yields that are nice and secure too. You know, General Mills. I look. I didn't do any due diligence on any one of these. I just know they're blue chip companies. You're not going to get the dividend whacked, completely eliminated. You know, you're getting a 7% dividend yield. Broke out of the bullish falling wedge. We still have plenty of room to my targets. I'll probably close this one out at T2 because it's the downtrend line and the 200-day moving averages come in. So I can tell you right now, I'll probably be eliminating T3 on that. Hormel was another one I gave. We're almost at T3 now. We already hit my first and second targets. So I guess we took it either probably on the wedge breakout there. So that should be about a 26% profit plus the 5% dividend yield you've been collecting. I don't know how many times it's paid. Probably one dividend since then. I don't know. Schmuckers, JM Smucker, right there. I highlighted this bear trap, meaning the breakdown below that 93. That's long-term support. So that was your entry. There was an example what I told you when you see a breakdown and then the breakdown fails, we call that a bear trap. Short sellers pile in, and then they have that Scooby-Doo rut-row moment where they realize, oh shit, the breakout that breakdown that I shorted to new all-time or 52-week low failed. Those shorts start getting squeezed. They start covering. And longs, like me, if I'm bullish, like a shark, I smell blood in the water. I'm going to jump in and take advantage of that. So that stock, since our entry point there, rallied a total, 26% in a matter of weeks. That was a bearish one. When I went up, just going over the ones I highlighted in the initial video, which I flagged, and I told you there were a few I didn't like in the same packaged food sector, and this was one because I had a divergent high. So I said you could short it. We just hit my first target, $51, 200-day moving averages. I would cover this one if you did short it. I didn't short any of them. I just highlighted to show you that I'm very selective in this sector right now, doing individual stock picking versus broad based. And they don't have an ETF that covers only packaged foods. Got to go with it's consumer staples ETF. PPC looking nice, coming off. It's at that 26 65 support. Broke out back testing, so this one hasn't run yet. Plenty of room. I see about as much as 36% upside on it. Campbell's, we already hit my first target. Still maintaining T2, and that's where I plan to book full profits if and when we get there. Plus, it's already paid out a dividend. I know that on that one. CAG, so far by the skin of our teeth, we've avoided the stop. Broke out a little wedge, the channel. Plenty of upside. Maybe we'll see. I'll still maintain T3 is my kind of my preferred target right now because I'm looking at these downtrend lines. This is what I'm just calling these guys back. They're in a bear market. I'm just calling them back to the downtrend lines and or 200-day moving averages. You know what? I need to adjust my downtrend line. I'm going to do it right now because I want to catch this reaction high right here that I didn't. I had it a little bit above that. So you have 1, 2, 3, 4. See how T3 comes in there. So, and maybe by the time we get there, we'll be at T2 and the 200-day moving averages, and maybe that'll be the final target, and I'll eliminate these two. That's how I work. So, a couple more. LW, Lamb Weston broke out of the first downtrend line back test. It continues to walk higher, up about, I don't know, 26% off the lows. JJSF hasn't taken off yet. BR Bell Ring just crapped out after the breakout there on earnings, but a lot of institutional buyers coming in here. Like I told you, you get, and I talked about this in recent videos. I said these guys will probably start to move once the tech and semi bubbles break or start to go down. Little hot air comes out of them because you'll see institutional rotation into the sector. Elway, LWAY, USNA, Beyond Meat. That one was a quick, you had to be fast on this one. We had a buy trigger there. We hit my second target and pre-market for an 81% profit. Pulled back. It's still holding that 69 support. I gave it to you recently as a setup. If it popped that trend line, but it's not going anywhere. This tends to be a risk on because it's a penny stock. I did all I could do to try to tell you the risk involved here and pass if it's not your cup of tea, Vegas money. But if the sector catches a bid, this guy could still catch a bid. I'm still maintaining T3 because we're still above this big bullish falling wedge down here. That looks like the initial run. We could get another run up to T3. BGS, nice divergent low. This one hasn't gone yet. LFVN, we rocked that one for 145% from where I highlighted it here as one of my favorites in the April 16th trade idea video right there. Pre-breakout, there was the breakout and nothing but net from there up to my final target I gave you of 1139 for 145% profit. And this is why I have final targets. That's where the risk reward no longer remains favorable. And so if you book the 145% gain or any of it, you sidestep this big give back. However, it's been a nice correction. You probably have a little uptrend line coming off the lows now that you're at. So, hey, guess what? Objective reentry. And if the sector goes, it'll probably have another leg up. So this one you could re-enter if you did take profits there. Hain needs to take out that trend line to run. We have 3 targets. And then RKDA, another one we hit. I forget what the profits were on that one. RKDA, just go like this. You go to resources. Oh, no, you go to trade ideas. Where is it? Trade ideas, completed trade longs. I'm trying to hover. And then you go to RKDA, sort by symbol. It's alpha, and this is for this year. So what did we hit? We hit a 50% profit on that one. There's right there. Boom. And that was it. Pulled back. So again, it's going to take the sector to run for it to get another leg up. Plus, it's a low price stock. So be very careful with that one. All right, guys, I covered a lot of trade ideas in 46 minutes. So I'm going to wrap this video up. Again, as always, if I do not have a summary out there for you, I'll follow up with one later, put that in. Still working on getting those. There's a lot of moving parts to automating or getting. It's a manual process actually right now to try to get a weekly summary out, but I really want to do that for you so you can sit down on the weekend and kind of say, okay, what are we watching right now? What are the opportunities for this week going forward? All right. But as of now, like I said, gold and silver starting to look good. Maybe a little more downside, maybe not. A scale in there. Crude, hard entry at support here and or in a breakout above the bullish falling wedge. Short semis, short tech, and just long select defensive issues and short crypto, particularly strategy, because strategy is where that's where I think the biggest blow will be due to their leveraging and the unwinding of that. All right. This has been Randy Finney with Right Side of the Chart. Have a great day.